The passage of the so-called Big Beautiful Bill has injected a fresh wave of optimism into the markets, but make no mistake, this is more than just another stimulus. It's a fiscal jolt designed to boost consumer spending, fuel economic momentum, and, at least for now, send the S&P 500 surging to new highs. But here's the catch, and it's one that seasoned analysts aren't ignoring. As one strategist put it bluntly, this bill may be the final shot of adrenaline before the economy staggers under the weight of its own deficits. In the short term, Wall Street is celebrating. Tax cuts, child credit expansions, and renewed government outlays are lighting a fire under equities. But beneath the surface, long-term risks are quietly compounding. We're talking about runaway deficits, inflationary pressure tied to global resource scarcity, and escalating trade tensions, all laying the groundwork for a potential stagflationary cycle. Yields remain stubbornly high despite falling CPI, oil production is peaking, and global supply chains are fragmenting in real time. This isn't just noise, it's the signal. Smart investors are positioning not just for this final leg of the bull run, but for the choppy, inflation-racked market that may follow. In today's video, we're going beyond the headlines to spotlight 3 strategic sectors that align with this dual reality, industries poised to benefit from the short-term surge and stay resilient in a longer-term storm. If you're looking to protect your capital while still capturing upside, this is the framework to pay attention to. First on the list is a company that's built to thrive in an unpredictable world, Lockheed Martin Corporation, ticker symbol LMT. At a time when geopolitical risks are escalating and nations are ramping up their defense budgets, Lockheed stands as one of the most indispensable players in the global security ecosystem. This isn't just a defense contractor, it's a cornerstone of military innovation across land, air, sea, space, and cyber. And in today's environment, that kind of strategic reach is more valuable than ever. Lockheed's portfolio is anchored by iconic programs like the F-35, the world's most advanced fighter jet, which continues to see strong demand not just from the US Department of Defense, but also from key allies in Europe and the Indo-Pacific. Its Missile and Fire Control division is growing fast too, driven by precision strike systems that are essential in today's evolving battlefield dynamics. Meanwhile, the company's space business is becoming increasingly critical, supporting satellite defense, deep space missions, and classified programs for the US government. In the first quarter of 2025, Lockheed delivered strong top and bottom line growth across nearly all business segments. Earnings rose nearly 14% year over year, while missile systems revenue jumped over 12%, fueled by growing demand for precision-guided weapons. Even as free cash flow dipped due to strategic investments, the company returned over $1.5 billion to shareholders through dividends and buybacks, underscoring its commitment to capital discipline. What makes Lockheed especially compelling right now is that it's not only benefiting from a record $173 billion backlog of contracts, but it's also pushing the envelope in next-gen defense technologies. From hypersonic weapons to AI-integrated combat systems to multi-domain networked warfare, Lockheed is investing where the future of warfare is headed. And as global supply chains fracture and new security alliances form, the world's leading democracies are turning to Lockheed to ensure technological superiority. In short, Lockheed Martin isn't just responding to global instability, it's helping define how the next era of defense will look. For investors seeking long-term stability with exposure to critical national security infrastructure, Lockheed remains a fortress in a volatile world. Next up, we have Applied Materials Inc., ticker symbol AMAT, a company that doesn't just benefit from the AI boom, it supplies the tools that make the boom possible. In today's semiconductor gold rush, Applied Materials is selling the shovels, specifically the wafer fabrication equipment that powers every advanced chip on the planet. Whether it's NVIDIA's next-gen GPUs or AMD's memory-dense accelerators, they all begin life on tools made by companies like Applied. And Applied happens to be the most broadly positioned and arguably the most strategically critical among them. The story here is all about scale, innovation, and resilience. As chips become larger and more complex, Especially with the rise of AI and advanced packaging techniques like 2.5D and 3D architectures, the demand for sophisticated deposition and etch equipment is skyrocketing. Applied is uniquely positioned at the center of this shift thanks to its massive product portfolio that covers nearly every stage of the semiconductor manufacturing process, but what really makes Applied Materials stand out is its sticky, recurring revenue model. Its Applied Global Services division, focused on maintaining and upgrading existing fab tools, now contributes nearly a quarter of total revenue and is growing steadily. With a 90% plus renewal rate and multi-year service contracts, this segment cushions the company against industry cycles and creates a predictable cash flow engine. Add to that a disciplined capital return strategy with growing dividends and ongoing buybacks, and you get a company that not only innovates at the cutting edge but also rewards shareholders consistently. Management has pledged to return up to 100% of free cash flow to investors over time, which underscores their confidence in the durability of future earnings. In short, Applied Materials isn't tied to one chip or one customer. It benefits from all of them. As global wafer fab equipment spending continues to accelerate, driven by AI, automotive, and high-performance computing, Applied stands to gain at every stage of the semiconductor value chain. If you're looking for a smart way to play the rise of AI without betting on just one horse, Applied Materials may be your best bet. And finally, is a company that's quickly emerging as the most credible challenger to NVIDIA in the AI arms race, Advanced Micro Devices Inc., ticker symbol AMD. While most of the spotlight has been on NVIDIA's dominance, AMD is rapidly gaining ground with its MI300X AI accelerator, a powerhouse chip that's now being deployed by Meta, Microsoft, Oracle, and OpenAI. That kind of validation doesn't come easy, and it's transforming AMD from an underdog into a serious contender in the AI data center space. What sets AMD apart right now is its unique advantage in high-bandwidth memory. The MI300X features 192 GB of HBM3E and over 5 TB per second of memory bandwidth, enough to handle massive AI models like Meta's LLAMA 3.1 in a single device. That's critical because the performance bottleneck in large language model inference isn't just compute, it's memory. The ability to run these workloads without partitioning drastically reduces latency and infrastructure complexity, a game changer for hyperscalers. Even more compelling, AMD is solving one of the AI industry's biggest challenges: supply chain diversification. With NVIDIA's H100 backlog stretching well into 2026, major cloud players are urgently seeking alternatives. AMD's chiplet architecture gives it a manufacturing edge, enabling more memory at lower cost per unit, and that's something companies like Meta and Microsoft simply can't ignore. But it's not just hardware. AMD's ROCm software stack has matured significantly, and real-world deployments like Meta's Llama clusters prove it's now robust enough for production inference at scale. Add in AMD's participation in open interconnect standards like UA-Link, and the company is positioning itself as the flexible, open-source friendly AI supplier in a market where vendor lock-in is a growing concern. With data center revenue already surging and AMD projecting tens of billions in AI revenue by decade's end, the momentum is real. As AI infrastructure spending explodes, AMD is no longer playing catch-up. It's writing its own chapter in the next phase of AI compute. In a world racing toward faster chips, smarter machines, and heightened global tensions, the winners won't just be the ones building the end products, they'll be the companies powering the entire transformation. Whether it's securing our digital borders, accelerating AI with memory-rich chips, or enabling the factories behind the future of semiconductors, these three companies are at the center of it all. They're not just reacting to the trends, they're helping define them. If you're serious about positioning your portfolio for where the world is headed, not just where it's been, these are the names to keep on your radar. Thanks for watching. If you found this insight valuable, don't forget to like the video, subscribe for more high-conviction ideas, and share your thoughts in the comments below. Stay smart, stay focused, and stay ahead of the curve.